Hello guys, welcome back to the channel. Today I want to talk a little bit about the general economic situation because it is quite important to see what's going on, uh, and then talk in general about the different assets that we normally see here. But there are two important assets that I want to start with, and let's get into it quickly. So first of all is the DXY, the dollar index. We have seen here this massive drop on the DXY, right? So from 110 was its peak in January. So we went quickly down to the current levels that this 99 probably was the low level. So it was down by 10%. That's quite a lot for the dollar index because it means that investors don't have confidence in the dollar as a reserve currency. They don't have confidence in the US economy. So they were not buying the treasury bonds, and that's why we also saw a huge surge in gold. So, and these are precisely the two assets I want to start with. I want to focus the talk today because it is very likely that we are going to reverse this situation. So, just yesterday, Jerome Powell was talking about the general economic situation, and he mentioned that he sees that due to the tariffs and uncertainty in the market at the moment, he sees a possible surge in inflation. So it is not very likely that they will cut rates soon, or at least at a fast pace as many people expected. And he also mentioned that he sees a surge in unemployment. So this means that it's not good news for the economy, but it is good news for the dollar. So because if they keep the interest rate high, and then might be a good news for the dollar and a surge in dollar, and consequently a drop in gold. So well, technically, let's see what happens with US dollar. US dollar here we are here battling this key level. This is the previous support level. A very important here you see here was a resistance. Then we broke, and then we were massively to 114 to 15, the highest that dollars has been at least recently in 2022. And then we were for a long time in this range. So we broke this range. We thought that we would go higher and higher and retouch this resistance, but we started with the tariffs, and then we came down crashing quickly. So, and we went past down the broke to the downside from the 100 level, this important support that was this support for this range, and now we are here at the 99 level. So let's see. As you can see right now, we are battling this level. So we have today euro rate decision that will probably move a little bit the dollar index and the euro USD pair, and we'll see later what happens with that. But it looks like the dollar is battling this level, and it wants to come up at least to the 100 level, and here from the 100 level decides if we go into the range again or we stay here at this putting up a base. So it looks like we want to do something like this, come up here, and let's see if it breaks up like this. If this is going to happen, then as you can expect, it's going to have the opposite effect on gold. So here we have gold. Gold, as you can see, this is a massive surge. So this parabolic rise is huge. It's huge. So just like look, just from 2023, from October 2023, we can measure with surge like 85%. So this is massive surge in gold. And then, well, it is looking a little bit too overbought. I think probably investors, institutions probably have already sold here, because here you see this big drop. Probably they sold here at this key level. They sold their positions, and then this is now just liquidations and retail investors that are getting late. And it looks like we are going to come down at least to retest this level, or even to this one to cool down a bit the rush. So we'll see. It depends on what's the US dollar doing. Another important thing to mention is that also Jerome Powell mentioned this during his talk yesterday, is that also part of is the uncertainty that people has in the US economy, and the tariffs, that's the reason why there were why people were selling the US dollar. And the other reason is because, and he mentioned, is that we had a problem with over leveraged products. So hedge funds, and I think I mentioned this in last video, hedge funds were over leveraged on certain assets, probably stocks, probably gold, and then they needed to cover their positions. They probably were receiving margin calls, and then they needed to add cash to their positions, and probably one of the assets that they sold was US Treasury bonds, US dollars. So, and that's why we saw a sharp decline in the dollar. And probably this was also here where they sold their gold positions to take profit and to get some cash to cover their stock positions. So that is coming more evident now, and then now we will see what happens. So let's go quickly to the indices, and then we can go to the to Bitcoin. Right. So what's going on with the S&P 500? S&P 500. Well, we made a bottom here, a local bottom at least. Then we surged quickly with the announcement of the tariff pause. We surged in one day. You can see this massive surge to the next key level, and now we are here range bound here. So we are battling this. It looks like we're forming a base here. So let's see if we stay here. How long do we stay here? And finally, if we decide to go up to the next level, or if we decide to retest this level and come further down to this other key level, which you can see here is previous support, previous resistance from different from past years, and then finally we broke out to the upside. So let's see if we stay just here at this key level, this important key level, or we come down to this area, to the 4,600 area, which was the previous support resistance level. We'll see. At the moment, it looks like we are going to stay here, probably at least until the new tariffs are decided in 90 days. So we'll see what happens. Nasdaq the same. Nasdaq put up a local bottom here, regain this key level. So currently we are battling this key level. So let's see. It looks like we want to stay up here, and then it looks like we will try this again, and then stay range bound here for the next for the next months. And the Dow Jones, the US 30, exactly the same. So we regain this key level, and we are staying in this range. The only one that is a little bit different is the Russell. The small caps, they didn't manage to, it didn't go up to the next level, so it stayed here on this lower range. That here we can see that it is an important range for the small caps. So of course, when there is a slowdown in the economy, the small companies are the companies that are hit the most. So that's why we can see here that the Russell is still struggling. Let's see if it manages. If the other indices go up, then it will pull up the Russell. Otherwise, we will stay here like we stay for a long time in this range. So another important thing to see is the volatility index. As we know, this is a good indicator for the economy bottoms and peaks and bottoms. So we can see here that in the past days we surged to a level of 60, so which was very similar to the level in August 2024. So not quite high as the pandemic, as in 2020, that was 85, but at least this indication of a local bottom. So we see that now we are coming down to a more stable levels, even though we are rising. So we can see here that we are rising, but we're looking to enter this range below 30. So if we stay below 30, then we can see a more positive sign for the stocks, and then we will see this that the stocks will come up to the next range. So let's see quickly. Well, the Euro USD is important to see because, as I mentioned before, you can see here that with the surge of the decline of the DXY, the dollar index, the euro, of course, surge. It looks like we made a peak here. We can probably draw this level here. You can see here that this is a important resistance level, then broken, then important support, broken support, and then it looks like we exactly touched this level. So we came to this level. It looks like we want to at least go down to this other key level, and from here see if we stay around here, we play here, or we go break down. So we don't know, but it looks like at the moment probably if the interest rates in the US are not lowered, then it might be possible that the euro comes down to touch this key level. The same with the GBP USD. The GBP went up not as aggressively as the euro, but it also went up. Didn't manage to pass this key level, so to stay under this key level. So it's also likely that now the GBP comes down to retest this other level. Remember that this is a daily chart, so here we're looking for long-term moves. We are not in a low time frame chart, so don't think that this is going to happen immediately. Don't think that we are going to crash tomorrow like this. No. So this will take time. This will take. This was aggressive because of the dollar. This is an aggressive case. You can count to 1, 2, 3, 4, 5, 6, 7, 8 days, 8 green days in a row. That is not common. So we might come crashing down 2, 3 days, but it is not very likely. It's more likely that we start doing something like this when as the investors decide or see how or try to guess what's gonna happen with the economy. Well, it can also be that in 3 days we go down to this level. So might be possible, but I'm more into something like this, sort of like more like a reasonable, stable drop. But we'll see. I can be completely wrong, so don't follow my advice as if it is a law. And actually, this is not my advice. No, don't follow my ideas, because this is not financial advice. Sorry, I want to just emphasize on that. This is not financial advice. These are my personal ideas, my personal opinions, and then you can judge here that we might continue going up, or we can come down here to this level. Right. So we already talked about the gold that it looks like gold wants to come down to retest this level. So silver, on the other hand, silver didn't manage to pass this key level. So it looks like now wants to come down to continue with this range. So look at this range. So it looks like we want to continue on this range on silver, which is, by the way, at a high level. Finally, we can check oil, because oil, if there is a expectation of economic slowdown or recession, then of course the oil is reacting to the downside. So every time the economy slows down, the economy cools down, then the oil is gonna come down, because then there's gonna be less consumption. So then this reacted, the oil reacted, breaking down on this key level, and then it looks like we're gonna stay range bound here unless they introduce a policy or they cut the oil production, but that is something that we cannot predict. So at the moment, it looks like we can stay range bound here until something happens, the economy improves, or they cut the oil production drastically. Yeah, then we can go up to the next level. But at the moment, it looks like we're going to stay here. Quickly to some stocks. Well, they're following, of course, they are following the indices pattern. So Apple, for instance, we came down here to this bottom, then we are trying to regain this level to go up to this range. It looks difficult for the stocks at the moment to regain all the what they've lost this year. So it looks quite difficult to pass all these key levels, but we'll see. At the moment, we have to go what happens here and go step by step. AMD was hit massively. AMD probably, well, I didn't even mark the levels here, sorry guys, but we can quickly mark them. So AMD came, you can see here, this is an important level. So here is resistance, support, resistance, resistance again, support. So this is an important level around here. So it looks like we want to come and pass this level again. Let's see if we do it or if we stay below here. Amazon the same. Well, Amazon conquered this key level and we're staying at the moment in this range. Google, we are also at the moment looking quite positive. We managed to retake this level. Intel has had a really bad time because of the competition, because of NVIDIA competition. So it's at a very, very low level. So a lot of people say, remember, this is not investment advice, but a lot of people say that this is a very good opportunity for Intel since it is at a very, very low level. So we can go to the weekly chart and see how low we are. Look, we are at a very, very important resistance level. So if Intel manages to stay here and not going below the 17 or let's say $16, then it is probably a good chance for Intel to regain those higher levels, higher prices. So Meta is also here at this low range at the moment, low local range. Microsoft is looking to break up to this other level. Netflix is behaving well. Netflix, they surged recently from this from its crash, from its bottom. It surpassed the first and it went all to the second key level. So and now we are here ranging on this key level, very close to the peak, and then we'll see if manage to pass again the $1,000 mark, or it stays here and goes down. NVIDIA, well, NVIDIA, as we know, is a very popular stock, so it's also managed to put up a local bottom here, and then we stay in this range. PayPal's been struggling a lot, similar case to Intel, and it's also looking at the bottom, and it has to show strength to regain these levels. Tesla also suffered and put up a bottom again here. It lost all the previous surge, the quick surge that had in the past year, but then it crashed this year, crashed again to 200 level, and now it looks like it's staying in this range. So look at this for Tesla. This is a very important range. So it looks like we are staying in this range, deciding what to do. If something positive comes from Tesla, we might see a new surge, or we might see visiting this other range, going down to this other range. All right, guys. Well, this is all for today today's update. Please subscribe to the channel, hit the like button, and just send me the questions, send me your opinions, and if you want me to check something more in depth. Thank you very much for watching, and see you in the next one.